This is the Barita Podcast, which is a medium for information purposes only. This podcast is not a recommendation to buy or sell any securities. This isn't a research report, nor intended to serve as a basis for making any investment decisions. Contact a licensed investment advisor before making any financial decisions. Let's get into the Barita Podcast.
Thanks everyone for joining us for another episode of the Barita Podcast. Remember, you can see past episodes at barita.com/podcast. All right, so special show today, 2 guests. All right, Simon Johnson, AVP, Alternative Investments and Structured Finance at Barita Investments, and we have Nigel Sinclair, Head of Asset Management. Thanks for joining us, gentlemen. All right, so let's just get right into it. Simon, what is alternative investments?
So, generally speaking, alternative investments is everything outside of what we traditionally know as investments. So that's your public equity or stocks and bonds. So alternative investments would include things such as private equity, private credit, which is just debt that is done privately within a private space, and structured products, which is the second part of my portfolio, developing specific solutions that are aimed at meeting the client's needs.
Okay, and you don't trouble real estate, right?
No, so real estate is this guy over here.
All right. So tell us about asset management, Nigel. I mean, we know it involves real estate, but it's a much bigger universe, right?
Agreed. So the asset management space, as you suggested, the spectrum is very wide, inclusive of real estate, portfolio management services, full spectrum in terms of equities, bonds, and those type of investment structures.
Okay, and you're off book.
Yeah, so specific for Barita, I have oversight for the off-book business, and by off-book, we relate specifically to the unit trust products, pension fund business, and the portfolio management services.
All right, cool. Well, all right, so we get into all of that, but before we start, Simon, it's been almost 2 years for you.
Yeah.
Nigel, about 6 months.
Thereabout.
All right.
Yes.
So, what's the Barita experience been like for you, gentlemen?
I mean, for me, I can go first. I was here first. So it's been a very good experience. The Barita environment kind of forces you to learn and to come up that learning curve pretty quickly. There is, when we say publicly that we're game changing and that we do things differently, it's true internally. So while we're developing structured products, we have to be innovative. We're challenged to be creative, to develop solutions that have never been done before, and to think beyond. So every single day it has been something new, and I've learned so much. So where I would have come in is I am now leagues away from that in terms of my knowledge around structured finance generally and overall financial engineering.
Okay, that's good. Nigel?
Yeah, I'm in agreement with Simon. The experience at Barita has been intense in a productive way. So in terms of moving up the learning curve, that's a significant part of it. So in terms of the spectrum of stuff that is being explored while here, certainly from the asset management standpoint, the spectrum is very wide. And certainly coming from a prior place, the spectrum in terms of stuff that we look at was not as wide. So my purview now is significantly better. And certainly in terms of lending my expertise, I'm also learning significantly from the complement that is here on the asset management team.
Okay. All right, so Simon, in terms of how this works, right, in alternative investing and structured finance, a lot of what the deals that you go out there and get put together and structure, you kind of have to sell Nigel upon them, right? Because Nigel writing the check, right? Let's go.
Yeah, so Nigel would be one of our clients. So there, even though we do work at Barita together, there is a Chinese wall. So when deals are what we call originated, so as they say, go out there and get it either by our team or by other parties internally, yourself, Ral. When we get that transaction, we would go through the process of, and just to break it down for viewers, let's say we get transaction A. What we'll do is we'll say, okay, this is the minimum amount of information that we need to start our internal due diligence. Due diligence really just means our review of the material. So we'll have a talk with the heads of the company. We'll see what their vision is, what they want, their capital needs specifically, because that's what's important to us, to ensure that they achieve their goals in the most efficient structure possible. So after we go through a review process, we'll then create a memorandum or a memo, an internal memo, have that reviewed by some of our executives, and then share that with our approval committee. The committee will go through. It's usually a back and forth process. So we tell our clients that, it's back and forth. So okay, did we look at this? Yes, but maybe we can get some more information on this. Maybe we can touch base on this. So back and forth a bit. Then when we finalize, and as we receive approval, then we would create a document that we create for the public. So that internal memo will have information that is specific to the unit. So we don't necessarily we don't share that outside of the unit. So we create similar to what people know as a prospectus for IPOs and APOs, etc. It's somewhat of a prospectus, but it's private, and then we will share. So we do something called a market read. So just as I would call someone from another institution, call Nigel and say, hey Nigel, I have a hot deal for you. This deal, the company is in the manufacturing sector. We're looking to raise quasi equity through a convertible pref share. The dividend yield is XYZ. Would you be interested? Nigel will say, boy, liquidity, that's a big thing though. Or he might say, boy, this sounds pretty interesting. And this is a similar so that market read is a similar conversation that we have with our other on the other side of that. So we then try to go through the distribution phase to have. So if we're raising $1 billion for a client, we will try as best as possible. Of course, we can participate through our various vehicles or on balance sheet, which means Barita, but we also try to get funds such as Nigel, internally and externally. Internally here with Nigel, I just want to point out that Nigel has to go through his process. So when I send him that prospectus or that information memorandum, Nigel himself may say, look, Simon, we need more information on this, I need more information on that. So his fiduciary duty is still held to his unit holders.
And like you said, we someone talk earlier, you said, why? Simon, we get them numbers.
Exactly. Yes.
That is accurate. So the due diligence process is very rigorous. So there's no slacking in terms of the fact that Simon is related to Barita. So that process is very, very, very thorough. And just to say that, I mean, not because some of those projects are developed within Barita is not necessarily that we will participate in same, because I mean there are other factors to consider as it relates to the respective funds. I mean the risk profile, the type of structures. So, but we do take a look, and as I can assure you, the due diligence process is as rigorous as looking at any other party.
Oh yeah, man. You never tell me that.
Yes.
I usually tailor products to the type of participation that we want. So, for example, let's say a client is looking for a 10-year facility, a 15-year facility. There are some pockets of money, as we call them, that don't want to go out for 10 years. But there are some, such as pension funds and companies that manage an insurance fund balance sheet, that may say, oh, they're comfortable with 10-year yield because that's what they're looking for. So we may craft how we do that security, and so that when we're talking to Nigel, who manages the pension fund as well, it would be more suitable for the pension fund rather than another fund. So a part of that structuring is not just knowing what the client wants. So that's the company that we are arranging the debt or equity for, but knowing what the market wants, which would be on Nigel's side.
So it's effectively a balancing act. I mean, as Simon mentioned, doing a market read is critical. So we will give feedback in terms of what type of structures would be comfortable looking at, whether it be in terms of from a coupon standpoint, in terms of a tenor standpoint, and then we work backwards in terms of say what respective portfolios that particular asset could fit in. So to the extent that that security comes to market and we do our due diligence and we're comfortable with same, we'd certainly look in terms of participating.
Okay. So, I mean, in a lot of literature that Barita has put out from the different raises that we've done and even the recent AGM, we heard a lot of talk about, you know, high beta assets being pricey or whatever the case may be in terms of how we assess the market and, you know, choosing to go the route of alternative investing, right? And really, even in the current situation, the current environment, we feel pretty good about that strategy, right? And, you know, just in terms of sidestepping different turmoil that has hit the market, you know, for want of a better word. But the point is, I hear a lot about alternative investing, right? So I mean, you gentlemen seem to really be at the tip of the spear in terms of the strategy of the organization. So, you know, the organization clearly is behind that. So, I mean, speak a little bit about the value prospect that alternative investing presents and how you see the current marketplace and the opportunity that's at hand.
Sure.
Go ahead, Simon.
All right.
Yeah.
So the current environment that we're in now is a high interest rate environment. Over the span of a few months,
that changed quickly, right?
The market environment has shifted.
Yeah.
The amount of liquidity that is in the market, that's cash, that's in the market is much less, and interest rates are much higher. So let me start from the market point and get back to how alternative investments can support that. What we've seen is that the cost of debt, a company that could have raised, let's say 3-year debt at 6-7%, 6-7 months ago, can't raise that debt at 6-7% anymore. Where that company, based on their balance sheet, you know, their ability to take on debt and their credit metrics, may have to raise debt at 9+% or double digits, which is significantly different from what it was just a few months ago. And though we do expect this interest rate environment to, you know, change over the next few quarters, this is just the market that we're in now. So what we've seen is that clients, institutional clients that would want to raise debt, are again looking for more tailored solutions that would allow them to raise the capital that they need while not affecting their overall income significantly. And that's where structured finance, which is a part of alternative investments, is. Now, that's on the structuring side. As it pertains to the client on the other side, that would purchase the security, rates are going up. You know, things should be good on the traditional assets. But what I always say is that with alternative investments, it provides aid to a portfolio, AID. It provides alpha here meaning a higher risk adjusted return. It provides income, and it provides diversification. All right. So when we are creating these structures, we create the structures with the risk that you're exposed to in mind, and as such, these structures tend to have a higher relative return per unit of risk that you're taking on relative to traditional securities. Now, we would have seen people that have held traditional securities over the past few months, the value of said securities would have changed because of the market environment. However, certain alternative investment structures or securities that have been issued within that private space have not had the same significant downturn. So that's where that diversification kicks in.
Yeah. Just up before you go, just to complement what Simon said, I think the market by and large has grown more sophisticated in terms of their approach to investing. Not only from the institutional side, but in terms of the retail side as well. So for example, over recent weeks, we have seen a number of alternative type structures coming on board. Some that, I mean, are generally not very prevalent on the local market. So, for example, I've seen some institution putting forward the potential play of perpetuity investment assets. I mean, we are seeing different iterations of fixed to variable, suggestions of variable to fixed, and different mezzanine type structures that complements the alternative space. So, I mean, I think we have grown significantly, and the alternative structuring dynamic is here to stay.
Okay. Boy, we might have to go into a whole heap of educational stuff, Nigel, because it's a perpetuity, it's a mezzanine, it's a fixed to floating. So, I mean, there's a whole heap to explain for those that have not moved up the sophistication ladder that you refer to. But if you can just break down those things just quickly, and then we can reiterate.
So for example, that perpetuity asset. So I mean, generally we see those in the developed markets like the States. So effectively, what they are assets that really have no tenure. So they go on forever. So the idea behind that is that your particular company issues that security, and that security will continue to trade on the market forever. So that type of dynamic now coming from the international market and being presented here as an option, I think is a move in the right direction as our market continues to develop. In terms of mezzanine type structures, I think Simon mentioned it to some extent. For example, you have debt securities with option to convert to equity. You have bonds with option for bonus options depending on when. And I mean, we have seen so many corporate securities with call options and put options. So those dynamics have been filtered into the market, and I think the market is growing more and more appreciative of those type of structures, as Simon said, to provide diversification for one sense. So
when you say bonus options, what do you mean?
So for example, I saw a particular security. You had a fixed coupon over a respective period of time, and to the extent that the client calls the facility, you get a bonus. I think the rate was like 6% above the pertailing rate. So those type of dynamics are coming into the market to add as sweeteners in terms of from a return standpoint, as Simon mentioned, in terms of alpha. And as I say, it creates that opportunity to diversify outside of the plain vanilla type structures.
So if you're making a 10% coupon for 5 years and the issuer calls it at year 3,
you
get bumps up to 16.
There you go, for example. Correct. So, I mean, as I say, it's a growing space.
Structure, Simon?
Well, we and I would say we structure bespoke instruments. It would be based on what our assessment from the client and our assessment from what the market wants.
Agreed.
Yeah.
Okay. Yeah. So I mean, just to going back to what you said before, and then we'll come back to Nigel, in terms of the appeal of alternative investing, summing up what you said, it's diversification by way of a different asset class, but importantly it tends to be uncorrelated. Is that fair to say in terms of summing up the benefits that we're looking at for some of those?
Absolutely. That's more on the mathematical side, but yes, the how it relates to the economy or to the overall economy is different from other assets. So other assets are more tied to where the economy is going. So if we're doing really bad, it comes down, and if we're doing really good, it goes up. This provides, so it's like an up and down. This provides some level of stability here, right? So that's where the low relative correlation comes from.
Okay. So Nigel, boy, Nigel, I really tip my hat to you. So 6 months, right? You come over to a new post, and I mean, we saw first world interest rates at 0 or less for like the better part of a decade, right? Or plus, very, very steady. Inflation very benign, right? The policy environment was kind of ho-hum for much of the last decade, and in financial participants, I think to a certain extent we're even lulled into some complacency from a fixed income point of view, and maybe even to a certain extent the equity point of view as well. But Nigel, start a new post.
Agreed, Raul. So I mean the environment, as indicated, was very accommodative over those past years. But they say in investments there's no free lunch. So I think at this point now the chickens are coming home to roost. So I think a lot of pundits looking back are saying, the quantitative easing policy by central governments by and large probably would have been too prolonged. And now we're seeing the impact of those. So I mean, it's a cycle, as Simon suggested. So I know we're at the tightening cycle. The question is how protracted that will be. I mean, within the context of what we're seeing in terms of the inflation print, etc. Hopefully, it will not be too prolonged. I mean, some pundits are positing that by first quarter of next year, we should start some easing or even earlier. So the idea is that we should, generally speaking, just try to posture and try to manage the process in terms of anticipating the move from central banks. I mean, we have seen it locally, for example, our central bank moving our policy rate now to what, 5%? And
From where was it December last year?
December last year, where were we?
Yeah, up to mid till late last year, it went as low as 50 basis points.
50 basis points.
So we have a 10x increase.
Easily. And
so
based
how
on,
you navigate that as an asset manager?
So, I mean, coming to Barita, I think from a strategic standpoint, I think the management and executive team has been very prudent and deliberate in terms of how they have positioned the company. I mean, we had a press report some weeks ago pointing to the capital adequacy of Barita and its affiliate in terms of how we have positioned in terms of maintaining liquidity and being able to know weather these challenges. So I think we're very nicely poised to benefit from some of the cyclical change that we think is likely to come over the relative near term to benefit. But I mean, it has been a challenging environment. Certainly we have seen the impact in terms of on the fixed income side of things in particular, and we have seen quite a bit of strain on the equity side. So it's really a function of us now managing that liquidity that we have and looking at the respective credits that we think can add value over the near term as we go through this tightening cycle.
Okay. I mean, if we are comment on quantitative easing, I mean, I personally take a different view. I think the fiscal is really what was the catalyst for the significant change that we're seeing in inflation. Because I mean, you put money into the system, that's one thing. But then when the authorities start to use it and push it out into the pockets of real citizens, that's a whole nother story. But we don't have to go down that rabbit hole today, right? We can have that conversation at a time. But the question, all right, so all of this guy, all of this gentlemen, so the alternative investing, right, and then just the navigation of the current investment environment to add to the screening of what's presented to you from asset management point of view. How do we package all of that for the benefit of our clients? We start with you, Simon, and just explain how everything that we've been discussing thus far redounds to the benefit of Barita's clients.
Absolutely. So when from my side of the business, when I speak to clients, their primary objective is to raise the amount of capital that they want within the time period that they want to, so that they can get on with their business, right? So when they come to us, that's usually almost always all what they know. They just want to raise this capital. So the question is how?
Yes.
How do we raise this capital? What we have been doing, and we continue to do, is to build out the capacity of the team to deal with the heavy pipeline that we have, and to ensure that these deals go through relatively quickly but prudently through the diligence and approval process. Based on transactions that we've done in the past, we've also developed additional skills to structure particular types of instruments to the benefit of the client. On the other side of my hat is actually creating these types of instruments for our retail and our high net worth clients or wealth clients. We've continued to issue notes even within this market environment. We closed one just a few months ago. The clients really love it. These types of notes give the clients tax efficiency, and a lot of them are very, very, very happy about that. And it's also very easy and streamlined to do for them. We want to continue this form of series note going into the future for them. So provide the structuring service, and we'll also provide the actual assets that can be sold to them. Another part of what we do, and we spoke about it in the annual report as well, is diving deeper into the realm of securitization. So using the assets that we already have, or purchasing assets in order to generate additional not just income for our business, but solutions for our clients. Because clients are always asking for securities, always. Simon, we need, through the advisors, Simon, we need this type of security over these years. And let me just to link in, Nigel, how we do that is, if a group of clients are saying that, look, we want security in this particular industry or currency or over this tenure, Nigel, who may be more tied to the market because he manages funds that operate in the fixed income market locally and globally, and in the equity market, might give Nigel a call and say, hey Nigel, what is out there in the market for us now? How can we help to expose our clients prudently to these types of investments? So that's a conversation that I can tell you that across the board, not just with Nigel, but with other sides of the business, is always happening on the behalf of our clients.
Yeah. Okay. Cool. So, Nigel, same for you. How do we, from an asset management point of view, take all of what we discussed here to hand benefits and value to the clients?
Well, one of the important points from the asset management side is really just educating the clients based on some of the market dynamics. So, one of the critical things, we have to ensure that they understand the market cycle dynamics. So, for example, if we're going through a high interest rate dynamic now, so what we tend to see in some cases is some amount of portfolio shifting, where persons look to move from some unitized products, for example, into more shorter tenure type assets. So, for example, just to give some context, the BOJ 30-day CD, I think one of the auctions over recent weeks, the average yield on it went as high as 10% in terms of successful bids. So, clients looking at to say, hey, there could be some opportunities in the short space. So we see some portfolio shifting in that regard. But generally speaking, though, what we advise clients is that, we're going through a cycle, and if you're looking more medium to long term in terms of investment, is really to maintain course in terms of holding solid assets, managing liquidity in terms of identifying potential opportunities, and then kind of get the feedback from the sales team at Barita, as well as support from our research team in terms of how we identify and choose assets that are suitable based on the risk profile of the client and what they're trying to achieve.
All right, so I'll play hypothetical clients for a minute, right? And I'll come over to you, Simon, and I've been growing my business, right? And I take some risks. I take some risks in terms of leveraging the business because the environment was benign, right? Before Nigel come, right? But now things have changed. Things have changed significantly, and I might be a little nervous about my debt stack, right? I still need capital, right? But if I continue to fund the business the way that I have been funding it, though it's been profitable and growing, I can't see a clear path for my interest expense, right? So I come to you and I say, boy, what you can do for me? Because I need to raise capital still, but I can't raise it the way I've been raising it for the last couple of years, right? I don't feel like that's prudent. What can you do for me in that kind of scenario?
Yeah, there are various things that we can do, and at the end of the day, it comes down to what the client is comfortable with. So it seems that this client is uncomfortable with the amount of cash flow that is going out in terms of interest for the debt stack that they have. So they might want to refinance the debt stack. What I would tell them is that, boy, in this interest rate environment, interest rates are very high. So if you took the debt 2 years ago or a year ago and your rate is at 6-7%, you might not be able to refinance at a cheaper rate. And of course that is based on where their credit metrics are and etc. So just generally speaking. So another part of our business is that when we're pitching to a client, we pitch a financial stack. So we go with debt and we say, but boy, this is the rate of this debt, it's not the best avenue. We can go with equity. So we can say, look, you're an unlisted company now, your financials look excellent, you have governance in place, which means you have your board, you have your audit committee, you have your chairman, you do audited financials. So you could look at listing on the exchange, on the main or junior market, and using a part of those proceeds to pay down your debt. Or we could look in the middle where there's a mixture of it. So we could say, you might not be ready to list now because there is a runway before listing. Maybe your governance isn't where it should be. Maybe there are a few business activities that you like to get out of the way that you think will add significant value to the business, but you'd want to do that before you list. So we may say, okay, let's create a runway. So you're here now, and this is where you want to get a public listing. We can provide capital for you through some form of convertible instrument. And convertible here just means that it will look like debt now, but at some point in the future, we'll have the option to convert that to ordinary equity or your type of equity. So we may say, look, you need 200 million to clear the amount of debt that you have. It's fine. Let us become your financial partner. Let's pay, but we'll invest based on a diligence process and the approval process, of course, that we explained. You pay down your debt, and now the business has probably more working capital in order for you to get those projects on board. Now, the thing is that when you become a client of Barita, it isn't just a transaction to us. Our executives will always say it. When we put our name on something, it's something that we believe in. So we will do that transaction for you, but we're there with you along the way as well. So we will assist in discussions with your board as it pertains to financials. That's our expertise as it pertains to financial engineering and the solutions that you may need, and strategically how you position yourself to list. We will assist if you need additional capital. We will assist if you need to tap into our vast network across the region and of course the globe. So that's how we kind of have that conversation, and it's usually a back and forth. So the client may say, boy, I don't want to list in a year, I want to list in 5 years. And then it's just back again. Okay, so if you list in 5 years, this is what may happen. And the process is very iterative. But I always say there is always a solution. It's just to get both parties or the multiple parties at the table to have buy-in for that particular solution and ensure that there is some benefit there for all of them to have some form of some benefit there.
Okay. And then Nigel, kick it to you, our client looking on and say, boy, with everything that's going on, I still want to keep investing. It is a little scary with all of the changes, etc. The statement might be a little wobbly, but they have retirement coming up, right? They have goals coming up, right? And they want to allocate their own assets. How can they interact with the asset management unit and achieve those goals? Or if they need to come back to Simon, I mean, what do you do?
Well, each client's circumstance will be unique.
Yes.
So certainly we'd have to have a detailed discussion with the client to get a sense in terms of what exactly those objectives are, the timelines presented in terms of what they're trying to achieve, and in terms of the risk dynamics, in terms of the risk appetite, in terms of what type of risk they can take on. I mean, what I say to clients though, generally speaking, I mean, challenges creates opportunities.
Yes.
So, for example, if you look back historically, I mean, all of the challenges we've had in terms of the major financial fallouts, we always recover. So it's really a function of the timeline in terms of, how quickly or protracted these fall-offs will be and how quickly we move forward. So there are opportunities. So as I say, it will be specific for each client. So for example, if there's a client that is looking for more a medium-term timeline in terms of investing, certainly now would provide some opportunities in terms of that. So I mean, for medium term, we're talking anywhere between 3 to 5 years. So the market is in a rut and then barely showing some recovery. So now would be an ideal time to take on, I'd say, some risky assets in terms of moving the needle in terms of from a return standpoint. So I mean, we can look at the full spectrum, whether it be equities, whether it be some type of fixed income assets that have been significantly pushed lower because the upward ticking prices in interest rates. So I mean, those spectrum would have to be looked at and tailored specifically for the respective client in terms of the particular need that the client wants.
Yeah, I got you. All right, cool. I mean, so gentlemen, I mean, when you're not at Barita and structuring different deals or picking investments, what is Simon, what is Nigel about outside of the professional realm?
For me, I'm big on family. So I have a daughter. She's 14. I know, but you think she's my second mother. So I try to manage the time as best I can.
Yeah.
I mean, currently she resides overseas, so I try to manage that process, as best I can in terms of using the respective technologies to stay in touch and try to get here as much as I possibly can in terms of spending some time. So that's my main focus. And outside of that, I mean, I maintain a fairly good relationship with my siblings and my mother. So that's the basic
family
for me.
man.
Definitely.
Okay, yeah. I remember we were talking before, and I was saying, I know your daughter, a teenager.
Yeah, man.
It's just big with the social media and things. So what we're discussing, Simon, is whether we could probably see a production, Simon, Nigel TikTok video. Maybe like a bounce challenge, or
I don't know. I don't know about that. I don't know about that. But while we're on that topic, I share a joke with her. So we were having a negotiation, so to speak, a few weeks ago. She wanted some fancy high-tech gadget, I was a little bit apprehensive in terms of getting her. So, we're having one of the discussions, trying to persuade me, and I said to her, when I was going to school back in the day, I used to carry half exercise books to school, and I don't think I turned out very badly, So she paused and she was like, but daddy, you went to school in like the 1900s. So, that was the end of the negotiations in terms of her getting that gadget. But
So I just show you daddy, that was then. It's a whole another century,
yeah,
right?
but I tell you.
Nigel, are you the cricketer or the footballer?
No, football. In yesteryears though. Yesteryears. Not so much now. Not so much now.
Okay.
So what about you, Simon?
I mean, a majority of my time is really spent with my own platform. I have a financial literacy platform called Stocks on the Rocks, and we are on a mission to spread the message about financial literacy across Jamaica and the region. So that's really what I spend a good amount of my time doing.
Yeah, no, I mean, the good thing, I must commend you for that. I remember, when I started this business, I think it was something like 4% of Jamaican households had a brokerage account, right? And I can imagine some of the things you've seen. But I think we're up to about 10 now.
Yeah, so the last statistics that I would have heard is that it's north of 10%. But I mean, as players in the field who know that's far from not even ideal. That's far from base.
Yeah.
So some of the conversations that we have, even like this, on a daily basis, are as simple as it is about debt and credit cards and taxes and things like that are just simply not had in certain spaces. So that's what we're focusing on, creating open, free, and inclusive spaces for that. So a lot of the media that we do goes across traditional and new social media, which we do as well, and it does have a reach. What we're looking to do more is more of a grassroots movement, so going into communities that don't necessarily have that full access as they'd want, and having this conversation on a person to person or in small groups, and doing that across the island. It's not significant in terms of numbers, meaning it's not a crowd of 10,000. Maybe that happens. However, these are the types of conversations that move us forward from that 4 to that 10 to the 15 to the 20, and more importantly, the financial system is critical to the functioning of the economy. It's where intermediation is, and I'll say intermediation meaning people that have excess money, place it there, whether for saving or investments, and people that have use for that money, such as Barita and Cornerstone, use those funds to develop and grow their businesses, and it is through the growth of those businesses that we're able to hire more. So 2 or 3 years ago, a good portion of the people that are at Barita were not there before, but as Barita expanded, and by extension the Cornerstone group, we've hired a lot more staff. So when if you take it down to the micro level, to the base, it really starts at how much does the average person understand, and if we can increase or improve the level of financial literacy for the average Jamaican, then our leading financial market will not only continue to be leading, but will be able to compete outside of this region. And then you will see larger companies coming to Jamaica to raise capital, coming to Jamaica for financial engineering and structuring needs. So that's the aim.
A noble endeavor, and I mean, I must commend you with the work that you're doing, and others like you, right? Because we see the difference. I think it's important to make a link for people to understand how financial markets can impact their personal lives and by extension the country. I tell you, we've been talking to a couple of other team members. We talked to Ambre, we talked to Awa, them guys. Ask them more. So what do you do in investment banking? I was saying, just nation building, right? I mean, one of them have like expansive views of the thing. I talked to Ambre recently. Ambre said, well, he's just here doing the Lord's work,
And that's the difference with the Barita team. It's
the spectrum.
It's more than just a job. It's the vision that has been passed down from Cornerstone, from the CEO's level, that has been passed down through the culture and through what we do on a daily basis. So when we say we actually, as I said, are game changers, I know Sean over marketing is not taking on marketing because he's competing with others. He's not. Sean is doing what he's doing over marketing because this is what we have to do to get the brand to the position, to get the company to a position where we can truly have an impactful change on the country.
Yeah, for sure. I mean, them guys definitely trailblazers, right?
Agreed. We're seeing it. I mean, certainly.
I don't know. I just feel like before Barita was doing certain types of videos, I never see. But others that remain nameless, all of a sudden there's a lot of videos.
More comments.
But anyway, gentlemen, thank you very much for sitting with us.
I appreciate it.
It's our pleasure, and hopefully the viewership will be enriched for hearing it. So thanks again, Simon, Nigel.
Yeah, man.
Much respect. All right.
Pleasure being here.
All right, thank you.
Take care.
You've just listened to an episode of the Barita Podcast. The Barita Podcast is available on all Barita's social media platforms. If you'd like to invest with Barita Investments Limited, visit our website at barita.com or contact us at 876-926-2681 to get started.